Good morning from London. I'm Anna Edwards alongside Guy Johnson and Lizzy Burden. We're an hour away from the opening trade. Here's what you need to know. Tariff turbulence ahead. President Trump admits tariffs will cause disruption, but the US Commerce Secretary hints at relief for Mexico and Canada, and he will speak to Bloomberg TV later today. Releasing the debt brake, Germany plans to relax its borrowing rules to boost spending, vowing to do whatever it takes to defend the country. DAX futures are up nearly 2%. Plus, China pledges to support domestic demand in the face of US tariffs, setting a bullish goal for growth and targeting the highest fiscal deficits in more than 30 years.
Well, this fire hose of news continues to flood these markets, and this is what a relief rally is looking like. DAX futures higher on Germany, saying it'll do whatever it takes. Asian stocks higher on the hopes of China stimulus. Wall Street futures higher on the hope of relief on tariffs. And Eurodollar finally breaking past that 105 handle. The countdown to the opening trade starts right now.
Tariffs are about making America rich again and making America great again, and it's happening, and it will happen rather quickly. There'll be a little disturbance, but we're okay with that.
Lots of sound, some fury. Not very much market-moving news out of that speech from Trump last night to the joint session of Congress. But it followed what was an epic session on Wall Street yesterday.
What an incredible 24 hours. So there's President Trump in front of two houses of Congress talking about, yes, there will be some disruption, a period of adjustment, and so we brace for that. And he is talking about getting trillions of dollars in tariff revenue. So that doesn't make it sound like a temporary policy, does it? But then during the session, in fact, just after the session, we heard from Howard Lutnick, the Commerce Secretary, talking about a pathway for the tariff relief for Canada and Mexico. That gets the market thinking and promising that could come as soon as today.
Yes.
That gets the market exciting. US futures push higher on the back of that. It comes on the day that stock markets erase the gains since the election. And so people are asking, is this where the Trump put is?
Exactly. I got a message joking that the market goes down exactly on cue, and immediately you get Lutnick standing up and saying they didn't mean it on tariffs. Is that the trigger? We've been asking, are markets the backstop on Trump's tariff policy?
Why am I listening to Lutnick here? Why am I listening to Lutnick? Because Trump then stands up and says, you know what, we're prepared to accept some pain.
Yeah, is it possible to trade these headlines that come from anybody other than the president? I don't know. If the market, maybe the futures are wrong. Futures are up 0.6% on E-minis.
And Treasury Secretary Scott Bessent saying that the focus is on Main Street, not on Wall Street.
Which is logical, because that's what this administration was elected on. In fact, it was almost elected on an anti-Wall Street narrative. So in some ways, some pain for Wall Street may not be a bad thing from a political point of view. But in the first term, this was the barometer. It doesn't look like it's the barometer in the second term. You've got to assume, looking at what was said last night by President Trump in front of Congress, that he is going to stick with it for some time still to come.
He certainly cared about this very much in the first term. Barclay's doing some of the number crunching on that and saying 156 mentions of stocks in his tweets during his first term, and far fewer this time around when it comes to Truth Social. So this Trump presidency, as we've said many times, does it really have a stock backstop, or is it all about treasuries?
Let's talk about Germany, because in some ways this was actually the more meaningful news yesterday from a market perspective, certainly later on in the day. And we've got Germany effectively mirroring what we heard yesterday morning from VDL, Ursula von der Leyen and the European Commission. We are going to do whatever it takes to defend Europe. We are going to step up. We're going to carve out. We're going to make sure actually the limitations that are being applied, maybe it's the sustainability rules, the fiscal sustainability rules that the EU has, or the German fiscal sustainability rules in terms of the debt brake, are going to be parked to one side, and carve-outs are going to be allowed.
And speaking of social media, isn't it significant that Friedrich Merz has posted on X, whatever it takes, in English? This is a message for the rest of the world. It's not just for the domestic audience, that they are serious about this. And Anna, you were flagging a note that came in from Deutsche Bank saying this is one of the most historic paradigm shifts in German history since reunification. Deutsche saying that you could have upside risk to the 1% growth forecast for 2026. It makes me wonder whether tomorrow's ECB cut could be the last.
Right, well, that's an interesting question, possibly for tomorrow, because in the meantime, we have, as you say, Deutsche Bank going positive on the euro, SocGen going positive on the euro. So all of that certainly very much in focus. And just to emphasise the scale of this, Holger Schmieding at Berenberg saying this is a fiscal sea change for Germany. Germany is finally taking on the leadership role, which, given its size and its fiscal space, it should have assumed years ago.
Markets like this. So that's the read-through into what is happening with euro-dollar.
The bond market, the bond markets maybe not.
Bond market a little less but not massively concerned. So I think you're probably going to expect a steepening of the curve to continue. I was talking to Val about this a little bit earlier on. That would certainly be the narrative out of this. Is this enough, though, to counter tariffs? Let's assume that Trump is serious about tariffs and that ultimately he doesn't like Europe and he is going to apply them. Is what we're seeing in Europe enough for investors to think about Europe differently? Even if Trump tariffs do arrive. So I think that's a key question.
This brings me back to our conversation with Kellyanne yesterday and how Trump strategises about the relationship between tariffs and defence policy. If Europe is willing to stump up the money when it comes to defence, will he give relief to Europe when it comes to tariffs? Because it looks like, if we can believe Howard Lutnick, that actually the door is opening for
Right, well, we'll see if these things are linked. And, you think about what Europe can do to defend itself from tariffs. What can China do to defend itself from tariffs, Lizzie, is a key question. And we may or may not have seen the full extent of those tariffs, and that's an important point.
Exactly. And so we have been hearing from the NPC for a third straight year. They're maintaining the 5% growth target. They are looking at a fiscal deficit target of 4%, an emphasis on innovation and technology. This is ambitious. Is it too ambitious, is partly the question. Our survey of economists only forecast growth of 4.5% in the Chinese economy in 2025. You've got a deflationary backdrop, and acknowledging that, interesting that they've lowered the inflation target to 2%. That's the lowest in over 30 years.
Is there enough here to stabilise the property market? That continues to be the question. We talked about it yesterday. There's still a lot of rubble left in that space, a lot of concern around how green shoots are going to be nurtured, and whether or not there is enough within this to nurture those green shoots remains an open question. Can I also point out that China is going to spend 7.2% on defence again this year? So if you just think about the backdrop, United States and Europe, China's going to spend 7.2 defence.
Shall we add that into our NATO graphic and just see how it compares? Yes, interesting that we don't know exactly the extent of the tariffs, do we, on China, because we've got up to 20% now, but Trump on the campaign trail was talking about 60%. Frederick Neumann was quite relaxed, really, about China's ability to deal with a tariff of 20% yesterday. Would the same apply if it were 60%? And Scott Bessent saying, it's going to be Chinese companies that have to take this on the margin. The US consumer is not going to pay. There's been plenty of research on the Bloomberg terminal that suggests last time around it was the US consumer that paid, but we'll see how it plays out this time.
But that's partly the reason why the response from China so far has been so mild and measured. The fact that they've been through this before, the fact that China's well prepared on tariffs, on soybeans, for example.
So what is the market going to move on today? Is it going to be tariff relief? Do we need to see that? Does Lutnick need to be proven right today?
First and foremost, if it's the European session, the German outperformance is going to be the thing we're going to be watching for, isn't it, on stocks? Because German stocks look set to fly at the open.
They were down.
Perhaps unless you're Adidas. It's a good day to bury that story, but they've come in with some light guidance.
Germany was down 3.5% yesterday.
Right.
So let's take a look at this on a more longer term
but in terms of what happens today, which was the question.
Is that a relief rally versus yesterday, or is this a reaction to what we are seeing in terms of the announcements surrounding fiscal policy? Don't know. We're going to wait and see. But Germany was down by 3.5%, so we'll see whether or not the 2.4% that it is called higher this morning compensates for some of that. Let's talk about what we're going to be talking about in the rest of the show. Birgit Ringstad-Vardal, Statkraft CEO, joining us very shortly to talk about European energy prices. Klaus Rosenfeld, Schaeffler's CEO. That is a big German auto parts supplier. Let's talk about the defence story with him as well. Oliver Dorre, the CEO of Hensoldt, is going to be joining us. We will definitely be talking about the defence story with that big European defence company. And Vanessa Rubio Marquez, LSE professor and former Mexican deputy finance minister, joining us to talk tariffs a little bit later.
So that's what's on the programme. Coming up today at 2:30 p.m. London time, we have the Bank of England's Andrew Bailey testifying, followed half an hour later by the US ISM services data. Then at 7 p.m. UK time, the Fed's Beige Book, and later on, Bloomberg Invest Summit. Day 2, speakers on the docket, Steve Mnuchin, former Secretary for the US Department of the Treasury. One to watch.
Yep. What else do we need to know this morning? Wednesday morning, is it only Wednesday? Shares in Hong Kong's CK Hutchison have soared after a BlackRock-led consortium agreed to buy control of its key ports near the Panama Canal. The deal comes after pressure, of course, from President Trump to limit Chinese interest in the region. The agreement includes the bulk of CK Hutchison's ports division. Leaders of Arab countries have endorsed Egypt's Gaza reconstruction plan in a move to counter President Trump's proposal for a US takeover of the Strip. An Arab League emergency summit backed the 5-year, $53 billion plan for temporary housing, rubble removal, and the return of the Palestinian Authority to Gaza. It also calls on the UN Security Council to deploy peacekeeping forces in Gaza and in the West Bank. And Bloomberg has learned that Goldman Sachs is set to start its annual round of job cuts, moving the exercise earlier in the year than previous reductions took place. Normally they take place in the second half. This year, the first half. The lender is said to be cutting between 3 and 5% of staff in line with prior moves. The Wall Street Journal earlier reported the bank will focus on reducing vice presidents after it added too many, apparently, in recent years.
Right, 11 minutes past 7 here in London. We are setting ourselves up for a pretty strong session coming out of Germany, coming up with the DAX futures up by more than 2%. We will follow up on how German stocks and bonds have been moving through the morning. We'll follow up on how they open at the start of trade. Plus, we'll also check on chip stocks after President Trump signalled an end to the CHIPS Act programme over in the United States. Next, we'll dig into European energy with the Statkraft CEO. If you want to get involved in any of our guest conversations, please do get in touch. IB plus BBTV Go is the function to use. This is Bloomberg.
44 minutes until the opening trade here in Europe. Are you ready? Another volatile session. Looks like it is in prospect. So buckle up. It's going to be another interesting one. Tuesday certainly delivered on that front. Let's talk about one of the key inputs into the European economy. Europe's largest producer of renewable energy, Statkraft, says it is delivering, quote, strong 2024 results, despite revenue falling significantly as power prices continue to moderate. The EBIT line looked pretty good, the operational line. The Norwegian state-owned company says the drivers of the energy transition still remain favourable, even in the face of increasing geopolitical uncertainty. For more now, we're joined for an exclusive interview with Statkraft's CEO, Birgit Ringstad-Vadal. Thank you very much indeed, Birgit, for joining us this morning. So, energy prices have come down but still remain volatile, but the operational line in your numbers still looks strong. You talk about it being one of the best the company's ever achieved. Can you explain what is happening here and how you're managing to do that?
Sure. So this is Statkraft's best result in a, let's say, a bit more normal market environment that we have seen through 2024. Our Nordic assets, our hydropower assets, are contributing strongly with the flexibility, and we have a very strong energy management. We also continue to deliver strong in our market activities across Europe. And then we are investing heavily in developing new assets in Europe and also in South America.
Birgit, let me ask you the key question that the rest of Europe wants the answer to. Is Norwegian electricity reliable? Can the rest of Europe rely on you, Statkraft, to provide us with the power that we need?
So we are part of a large European energy system, and Norwegian power alone cannot support the whole European consumption. But we are contributing with our flexible assets, matching that with the intermittent energy across both the Nordics and in Europe. And we support whenever we have electricity available and trading that in the market every day and every hour.
But there is some suggestion that Norway may decide that it doesn't want to continue to provide that backstop that Europe so desperately needs right now. What is your view on this? Can we rely on Norway? There's some political noise within Norway that suggests that maybe we can't.
So the current government is very supportive about the interaction with Europe and supporting the European interaction. This is a combined energy market. In my view, the interconnectors will over time be beneficial both for Norway and for Europe. and that we together can use our electricity sources to make the most optimal mix for the whole of Europe.
Birgitte, good morning. You talk about investing heavily in Europe, and you've set out various geographic priorities. The conversation around renewable energy, no doubt, will be getting a lot of influence from the United States, and the resident of the White House has strong views on renewable energy. What kind of certainty do you need around European energy demands and European commitment to renewable energy to continue investing in Europe?
Well, so of course, what's going on around us in the world, in particularly the debate about tariffs, will have an impact on European industry and thus the demand. It can go both ways, actually. It will be more costly in a way, but it can also give an opportunity for European industry to contribute more locally. When we look at the European energy market, the need to invest in renewable will also make the European system more cost effective. The European electricity cost, the energy cost, is higher than in other markets. So more renewable will contribute to a lower cost system in Europe and therefore be positive. We see that the European Clean Industrial Deal is still supportive of more renewable, supportive of taking down congestions through building grid. And these are the elements that we see and will need to see going forward to continue to invest. When we talk about renewable...
Yes, I was just going to take you on to talk about Germany, actually, because we've heard overnight from Germany big spending plans when it comes to defence, but also more broadly in infrastructure, transport, in energy, housing. What plans do you have in Germany?
So currently we have gas-fired power plants, we have hydropower and we have wind power. We are working to develop both wind power and solar power in Germany to complement our current asset fleet in the country.
Birgitte, good morning. Lizzie here in London. Just going back to your results, as we get more volatility in these markets, potentially more lucrative for you, what does that mean for the size of your trading team?
So we have a strong trading operations across Europe, both trading, but not at least also providing contracts to industry and developers. They have, over the last few years, demonstrated strong results. And as you say, this is a market that creates opportunities for us in our market operations. So at least we are working on keeping and increasing that activity.
And if I can just come back to where Guy started, your role in Europe. I know that your focus is renewables, but I'd love to get your view. What do you make of the suggestions that Norway's natural gas windfall should go to Ukraine's defence and eventual reconstruction rather than into Norway's sovereign wealth fund?
So first of all, myself and all Norwegians are very supportive that we find peace in Ukraine. But to that questions, this is more for my owner, the government, to comment in general. Norway contributes a lot to Europe in many aspects, but I don't want to go very detailed into political questions with my ownership.
OK, we're going to leave it there. Statkraft CEO Birgitte Ringstad Vardal, thank you very much indeed for joining us. We've got details coming through on a number of fronts. There's a fairly substantial bond market move that is taking place right now. German bonds are opening up, and we'll come back to that in just a moment. We've also got numbers coming through from Dassault Aviation. Let me just come through and talk about those. Dassault Aviation could be one of the biggest beneficiaries of the defence spending story that we are watching. It makes the Rafale fighter jet, amongst other pieces of technology that is going to be used going forward. So the adjusted net sales line beating estimates, but as you can see, this stock has been rising significantly lately, mainly on the back of political news, rather than necessarily the numbers that it's posting at the moment. There is a future expectation that is increasingly being built into these defence stocks that the numbers are just going to rise and rise and rise. Germany is going to do whatever it takes. What about the rest of Europe?
Absolutely, and this is having an impact on the rest of Europe. So German bund yields are higher, up by 18 basis points on the 10-year. We see moves of 13 basis points on the French and Italian 10-years. Delving into the German curve, you can see that yields are up across the curve and up by nearly 20 basis points at the longer end. Let's get instantly to Valerie Teitel, who can help us explain all of this. Now, in a sense, we were looking yesterday at the markets and wondering why we maybe weren't seeing more movement in German debt, and it was kind of explainable, but we've heard big news overnight from Germany, and I suppose this move goes hand in hand with that.
Look, bond market taking a big beating in Germany. That 30-year yield up nearly 20 basis points so far in this morning's session. Perhaps that 500 billion number was quite a shock to the German bond market. But one thing the market still doesn't know, Anna, is 500 billion they want to raise over what time period? Is it 3 years? Is it 10 years? Is it 1 year? That is going to be the next kicker for the bond market. If they want to spend this kind of money in a short time frame, that is going to be a lot of pressure on issuance. They're already issuing quite a substantial amount compared to history. Just how much investors will welcome this further issuance, and at what yield level will the market tell the German government that this that this new issuance will have to hit the tapes at? The 18 basis point rise in the German 30-year, you have to start asking yourself, is this going to risk a return of the bond vigilantes? Is the market going to tell Germany that fiscal headroom is not as large as they think?
And what about the stock market reaction, Val? Because you've got DAX futures pointing up 2.3%. We've been talking about the capacity issues potentially in European defence names, but it looks like they're going to have another up day.
Yeah, so far, the market, both in FX and equities, is taking this extra defence spending as something that will contribute to economic growth. It's still a lot of questions out there whether that will actually be the reality, but we've seen the euro fly yesterday on this announcement, not only breaking 105, but now trading above 106, nearly at 106.50. So far, the read-through is that this is going to be positive for European growth, for German growth. This is something that's going to help the economic outlook, perhaps drive some private investment on the back of public investment.
It delivers some productivity. Germany's got a debt-to-GDP ratio of 62.4. Relative to the rest of Europe, this number is absolutely tiny. So, yeah, German yields might go a little bit higher, but is there really a serious threat here to Germany's debt sustainability?
No, but you have to keep in mind that French yields, Italian yields move in line with German yields, right? They are the risk-free rate of Europe. So if we see a sustained rise in German yields, that's going to cause some problems for France.
So that rate remains, so those spreads remain as they will. It's not going to be Germany compressing up into France, Italy.
Well, look, we have yet to see, but yields rising across the European sphere will cause some problems for, let's say, the Italian government or for the French government that has already, gone through a big tussle about what to do with their budget. The other thing that's unknown is this German defense spending going to come at cutting perhaps other spending that the German government wanted to spend on, like benefits, for example.
Today, it's both of those things. So we see French and Italian yields have gone higher in their own right, but we also see that spreads against Germany have come down. So we're finding some more common ground, it would seem, in Europe.
Bloomberg's Valerie Teitel. As we look at the 10-year bund yield higher, 18 basis points, 2.675 is where we are at the moment. Coming up, it's a slight miss for German auto industrial supplier Schaeffer on revenue and EBIT for its full-year results. We'll bring you an exclusive interview with the CEO next. This is Bloomberg.
Welcome back. This is the opening trade, Wednesday, the 5th of March, and we're going to see big moves in German assets. We're already seeing that. In terms of stocks, that's still ahead, 2.2% higher on DAX futures, expecting to see defence names go higher once again, but perhaps the wider infrastructure space as well. As we've heard from Germany, an infrastructure fund of 500 billion euros to be set up over 10 years, and a change in the constitution needed to exempt defence and security spending from previous caps, of course. They need to get this done before the new government comes in. So there's a lot to talk about when it comes to Germany, and it will be reflected to some degree in stocks today. Bonds already reflecting this story, and beyond Germany, which is really, really interesting. We're up by 13 basis points on French 10 years. The Italian up 13 basis points. Spain, Portugal, to Val's point earlier, all of these yields going higher in sympathy with that German bund move. And across the German curve, we see all tenors with yields going higher.
Are you going to see a super steep German curve, though? Is the ECB going to continue to have to cut, I think, is a key question. What happens if tariffs are put on? Does the ECB have to react to that? I think there's a lot of things in flux here still in terms of other aspects of this story. But we've already seen a significantly steeper German curve. How much further does that have to run, I think, is a really interesting question from a bond market point of view.
Yeah, the MLive blog noting the 2-year, 30-year spread at its steepest since mid-2022. And if this move on the 10-year holds throughout the session, it's going to be the worst day for bunds since the early days of the pandemic, March 2022.
This continues to push the euro a little higher as well, up by 0.25%, 106.52. I saw various, I think it was the Markets Live team asking earlier in that one of their questions on their blog about, you know, how can this take us much higher on euro? Do we get to 110 to 120? And we're already seeing certain houses, Deutsche Bank, SocGen, turning more positive on what's going on the euro.
But are they factoring in the tariff story? If Trump is prepared to put tariffs on Canada and Mexico, why should we believe that he won't put tariffs on Europe?
And Markets Live also making the point that when he listed the countries that he's angry with about tariffs, he mentioned Europe, and you mentioned Europe first. So somewhere he's going to need to put in tariffs that are long-lasting if he wants to get a lot of revenue from tariffs as well. And that's where you come to that China conversation, you come to the European conversation, perhaps more than Mexico and Canada, which has been our focus over the last 24 hours.
So I'm looking at DAX futures. Monday, big rally. Yesterday, big sell-off. Today, well, it actually came late yesterday, but we're up about, on the 3 days, Monday, Tuesday, Wednesday, we're up around 1.4% on German equities. OK, we'll see how it plays out then in today's session. Let's get to one of the German companies that's contributing to the narrative around Germany today. The German auto and industrial supplier Schaeffer has narrowly missed estimates on revenue and EBIT for its full-year results out this morning. Let's start with the numbers and then expand the conversation exclusively with the CEO, Klaus Rosenfeld, who joins us now. Klaus, thank you so much for being with us. Just looking at the numbers you put out this morning, and you've got a 2025 adjusted EBIT margin. The range is 3 to 5%. I think the estimate going into this was 5.9, so the market could be a bit disappointed there. What's the messaging? What's the driver for that retreat a little on that guidance?
Well, let me first say we are reporting today a year 2024 that was a special year for us because of the acquisition of Vitesco. But certainly also because of the challenging environment. And I can say the 2024 results are satisfactory, also because we cleaned up certain things from the acquisition. We wrote off certain deferred tax assets. We had restructuring costs. That is the year 2024. Now, looking at the year 2025, and that's again a little bit complicated, you need to take into account that the two numbers are not really comparable, because we consolidated Vitesco in 2024 only for 1 quarter. And that leads to a slightly more reduced guidance of 3 to 5% at the moment. That guidance is certainly there again for a year where integration will happen. That's why we have been more cautious. That's why we have to be more cautious, also as uncertainties remain high. But I can say, with the new situation, we will report now 4 different divisions: an e-mobility division, a PTC division, our aftermarket business, and industrial. All these 4 divisions have their different narratives, and we will demonstrate to you, in particular the midterm, that a year 2025 is fine, but what really counts is now going after synergies and the profit improvement program that we call Forward.
OK, so you're pointing ahead to some synergies, and so there will be some progress made perhaps on those margins as we go through the year. So when I look at your numbers, Klaus, what can I say about the state of the autos industry in Germany? We've talked for so many months, for years even, about the sort of beleaguered state of the German auto industry. What can I take from your numbers, and what story can I tell about that?
Well, if you look at the German auto industry, I think the dominant theme is in transition. And it's in transition because of the question, what is going to be electrified? And our response to this as Schaeffer is, we want to play across the whole spectrum of powertrain solutions, starting from battery electric vehicles to classical combustion engines, and everything that is in the middle that you typically call hybrid powertrain solutions. That is how we have positioned ourselves. It's not e-mobility or ICE, it is the full suite. And we think that is the right answer to this transformation that is happening. We are very well equipped now with the technologies we have, with Vitesco included, and we'll play that strength for the next years. Together with our aftermarket, don't forget, in a situation where the economy is rather subdued or down, people don't buy cars, they repair cars. And you can see this very clearly in our numbers, also in the guidance, by the way, that there's always a hedge between the original equipment market and the aftermarket. And that is another strength of Schaeffler, that we can play there with a second hedge. If people don't buy cars, they repair. And that's good for us.
Klaus, you say that the German auto industry is in transition. It's also staring down the barrel of Donald Trump's tariffs. I wonder what you think the impact of those tariffs will be to your business and what the German government's response should be.
Well, let's say the tariffs are everything else than helpful. They create extra work. That is certainly on the negative. We will try to pass on these extra costs to our customers as much as we can. And we've shown that before. We have a specific task force in place in the US that does that and calculates that and tries to keep up with the dynamic environment, because there are always new tariffs coming on board. And so far, if that happens, the impact on us is manageable. What should be the response? The response in such situations is normally that there is some sort of countermeasure from the countries. You have seen that in Mexico. You have seen that in Canada. Let's see what happens in Europe. But that is hopefully an invitation to negotiate something that brings tariffs in the midterm down. Because we all know that more tariffs create more inflation pressure, and that's the last we need in this world.
Interesting that you've got a task force like so many other companies gearing up for this. And let me also ask you about the other crucial development overnight, the commitment of Friedrich Merz to do whatever it takes when it comes to defence spending. Some analysts talking about a paradigm shift here. Given that new sense of urgency, I wonder if you see an opportunity to pivot from autos and more into defence.
Sure. First of all, I think this is a sign of confidence. It's a positive sign that the incoming German Chancellor talks about such a program. He obviously is willing to address the issues in a different way, and that creates, from my point of view, some sort of optimism. And that's important, because we have been in a situation, particularly in Germany, where people started to, think a little bit about, is that the future we want? And I think something big here that addresses the issues is certainly positive. And it's in particular positive if, on top of this, there is strong European alignment. I think these are the days where we need to call for a strong Europe. And if Germany is a driver of this, then we're on the right track.
Can you see a place for Schaeffler in all of this? Are you thinking
Absolutely.
about how maybe a fifth division? Is there a fifth division? Is there a defence division that Schaeffler maybe could offer up to help in this process, take advantage of this process, absorb some of this government money?
No, for sure. Let me first say we have, apart from our auto business, traditionally a strong industrial business. And that will, whenever people invest in infrastructure, that is typically something that is positive for us as well. Now, in terms of the defense question, that's a delicate question. And let me share that here with you. We are already doing some smaller defense activities, in particular in the aerospace business that we have, and that's predominantly a European-American business. For sure, we are thinking about, is that something that we want to extend? We'll do that in the summer in our strategic dialogue. We're doing this together with a review of the sectors that we're in. There are also other opportunities, apart from defense, that are interesting. Think about humanoids, for example. We are positioning Schaeffler in these years as a motion technology company, not only as a car company. We can do more than cars. And defense may be an example, or a humanoid robot where you need all sorts of actuators, our parts that create movement. That is certainly interesting areas. So I'm positive on our future. I think there are, with the technologies we have, also with the technologies that we have now, thanks to the acquisition of Vitesco, there's a very strong technological base, and that needs to be built.
Do you think what you're talking about sounds like Germany, Inc., AG, maybe pivoting away from what it has traditionally done, thinking about new technologies, thinking about defense? Should Germany pivot? We think about Germany as a car company. We think about Germany as a car producer. Should we no longer think about Germany as a car company? Is that what the message you're delivering here? Can Germany deliver technology in multiple forms?
Absolutely. I think what we say for Schaeffer here, we can do more than cars, and it's all about technology and innovation. And if that spirit is applied to Germany, I think it's a very nice and interesting analogy.
Klaus, great to catch up. Thanks for the numbers. Thanks for speaking with us this morning. Klaus Rosenfeld, the CEO of Schaeffer, a motion company. Coming up, we're going to be talking about another motion company. Adidas is known for issuing conservative guidance. This morning it's posted full-year operating profit forecast that has missed estimates. We'll have more on the retro sneaker boom in stocks to watch. That's coming up next. This is Bloomberg. Wednesday the 5th, good morning. 14 minutes until the equity market open. As you can see, we are expecting a pop higher, but the real story this morning thus far actually is in the bond market. Check out what is happening with the German 10-year. It is up sharply, 20 basis points up to the upside. We are seeing a huge move on the back of the announcement that we are going to see cars out from the debt brake coming from the Merz government. What is interesting here is that the German curve is steepening up. No surprise, maybe really there. You're also seeing some compression. So Italy this morning is trading 104 over Germany. The average over the last 3 months is 111. So you are seeing some tightening up, some spread compression across Europe this morning, Lizzie.
Meanwhile, we've got to factor in some hope that there could be some relief on tariffs. But if we look back to Donald Trump's speech to Congress, actually he defended his use of tariffs in a primetime presidential address to a joint session of Congress. Trump warned, quote, of a little disturbance from the levies after his tariffs against the US's largest trading partners sent markets swinging.
If you don't make your product in America, however, under the Trump administration, you will pay a tariff, and in some cases, a rather large one. Countless other nations charge us tremendously higher tariffs than we charge them. April 2nd, reciprocal tariffs kick in. The tariffs will go on agricultural product coming into America, and our farmers, starting on April 2nd, it may be a little bit of an adjustment period. I have also imposed a 25% tariff on foreign aluminum, copper, lumber, and steel. Tariffs are about making America rich again and making America great again, and it's happening, and it will happen rather quickly. There'll be a little disturbance, but we're okay with that.
Bloomberg senior editor Bill Ferries joins us now for analysis. Bill, who do we listen to when it comes to tariffs? Do we listen to the president, resolute as he sounded there, or do we listen to these hints of Howard Lutnick, the Commerce Secretary, in terms of a little relief for Mexico and Canada?
Yeah, well, I think we were really hoping Donald Trump would expand upon Howard Lutnick's comments about potential relief coming, at least in terms of those 25% tariffs for Canada and Mexico. We didn't get any clarity from that speech on where things are headed. We don't know if Lutnick got out ahead of his boss, if he's previewing something, or if there really is any agreement at all. With Trump, going back to your question, it's never official until he says it and until he signs it. So we'll be looking. But as your clips showed there, there's definitely no backing away from the idea of tariffs as a tool, whether it's an economic tool, whether it's a punishment or a political tool to get more manufacturing back into the U.S. or to go after countries who have policies you don't like. So that seems like it's going to be a standard thing going forward, at least for the 4 years of this administration.
Bill, let's talk about some of the other key moments from the speech that was delivered yesterday in Washington. Let's talk about what is happening with Ukraine/Russia. There were hints going into the speech that maybe the president would announce that a minerals deal with Ukraine had been signed. We did see a tacit apology emerging yesterday from Zelenskiy. What do we know about the timeline? Where are we in that process? Is progress about to be made?
It sure sounds like it. I think during that speech, during that 100-minute speech President Trump gave, he read out what he said was an excerpt of a letter that President Zelenskiy had sent, basically saying, I'm willing to sign a deal at any time that's convenient to you. So whatever, we still don't know what a lot of the details of that agreement are, but I think it's always been almost more of a political agreement than an economic agreement. Yes, it will give the U.S. some access to resource revenue from Ukraine, but more importantly, I think, is that it keeps Ukraine, if not at the negotiating table, somewhere close to it, as Trump and his administration really press forward with Russia trying to wind down this conflict.
Yeah, just yesterday, Bill, we were asking whether we were going to hear from Volodymyr Zelenskiy ahead of that address to Congress with some kind of apology, an olive branch perhaps, and it did seem as if we got something in the form of a letter, and Trump was reading that out, of course. Bill Ferries, thank you very much for the update on what we heard from President Trump's address to joint houses of Congress. Let's get back to the markets. The story evolves at pace. Our Markets Live executive editor, Mark Cudmore, is with us. So much to talk about, Mark, in the last 24 hours, whether that's the Trump tariffs and what that's doing to markets, or whether that's what's going on here in Europe and in Germany. So German plans to spend more, to change the constitution to allow themselves to spend more, really upsetting the bond markets to some degree. We see yields going higher in Germany, but across Europe as well. Your takeaway from this bond market response?
I think this is a very important dynamic because it upends the very much consensus narrative going into the year. Going into the year, every investor was bullish dollar and almost every investor was bearish the euro. It was just seen as a stagnant, sluggish economy with no end in sight. That narrative is being ripped up. With Germany planning to spend, the idea of fiscal injection coming into the continent is changing the story there. And it's at a time when the US is being deeply undermined by its own leadership, and therefore people are looking for alternatives to the dollar. So I think that this move happening in German yields is particularly positive for the currency because it's not like Germany is going to have a problematic debt situation. So it's only a positive rise in yields when it happens in German yields. And therefore it's a really, really big boost to the currency and very much a positive that can overall sustain for much of this year.
Mark, the price action in the US session yesterday was absolutely wild. What is the takeaway from yesterday? What is the lesson that we should learn, and what does it tell us about what is about to happen?
I think investors are retaining way too much hope, putting too much credence into the idea that Trump once had a book called The Art of the Deal, and therefore everything he does in tariffs is negotiations. He has been extremely consistent, and I think people underestimate him by underestimating the coherence and consistency of his message. He loves tariffs. He thinks they're the greatest policy tool ever, and it's about revenues. He wants revenues from tariffs to thereby cut taxes on American corporations and American people. He is very, very determined that some large tariff revenues need to come in. For large revenues, they need to be imposed on one of the major trading partners in the US and at a high level. Now, exactly where they will end up being imposed is hard to know, but the end game will be months from now that US will have a much higher average tariff rate than it has right now, and therefore US equity investors are in denial of that fact and clinging on to every promise that he'll retract or change plans like Lutnick promised yesterday.
Yeah, but Mark, if you bring the two together, if Trump loves tariffs so much and he brings tariffs on Europe, how do you weigh that against all the optimism about more defence spending?
Yeah, I think that's ultimately going to be a problem for Europe. And my theory is, and it's hard to know exactly what happens with the US administration, to me, though, Europe will be one of the big victims of the US tariff policy. But I think that ultimately that's not the main dominant dynamic right now. I think what's upending the narrative bigger is the increased spending out of Europe. So I think we've got more positivity to go on the European side, particularly through the currency.
OK, Bloomberg's Markets Live executive editor Mark Cudmore, we thank you. And remember, you could get up-to-date analysis from Mark and the rest of the team. Just go to MLIV Go on your terminal. Let's get to your stocks to watch now with Joe Easton from our equities team. Joe.
Morning, Lizzie. So we are expecting to see some moves higher in the German defence and industrial stocks this morning, given this incredible news on the German spending, really quite significant in terms of what we're seeing on those headlines. So keep an eye on the German defence names, including Rheinmetall, Hensoldt and Renk as well. Actually, the other stocks outside of Germany, actually a little bit low on Tradegate, but the German names rising at the moment. And we're also seeing similar calls higher on the industrial stocks today. So we're going to be keeping an eye on Heidelberg Cement, Bilfinger, Hochtief, ThyssenKrupp. Anything exposed to German infrastructure should get a little bit of a boost this morning. Then in terms of Adidas, looking a little bit weak, but as Guy mentioned earlier, they do tend to guide a little bit lower or be a bit conservative on some of their guidance. We can see, though, that stock has had a decent run over the past year and actually seeing a few calls for that one to edge a bit lower. A lot of analysts on the sidelines for that one, as we can see there. Then in terms of the drinks maker, Campari, the maker of Aperol Spritz, or Aperol, of course, that one looking weak once again. However, as we can see from the chart there, it's been on a terrible run, so potentially we might even see a bit of a rebound despite downgrades to earnings likely to come through. Watch Campari in Italy today.
Joe, thank you very much. Joe Easton, our equities reporter. Well, we brace ourselves for a strong session in Germany, very mindful of the fact we were down substantially in Germany yesterday. So how much of that lost ground do we make up on these spending plans that, yes, cover defence, but as Joe was saying, also go wider into industry? We'll also watch the open of gilt markets. Will that reflect what we're seeing in the rest of Europe with yields really going higher? This is Bloomberg.
Good morning. Today's story comes definitely with a German theme. We're going to talk about that a lot over the next few minutes. Let's take a little bit of a history lesson as to what yesterday delivered, though, because German assets yesterday were under significant pressure. The DAX was down by 3.5%. As you can see, the Stoxx 600 was going in but one direction, and that was lower. US assets, on the other hand, were on a roller coaster of a ride yesterday. Up, down, up, down. We had an N-shaped story yesterday, as someone's pointed out, in the US session. So that's what we were looking at the end of the day, a market that fell rapidly into the close. We got news after that. We got plenty of news after that needs to be factored into this morning. How are we going to open today? Looks like a little bit higher. Europe off the lows. US a little bit of a factor in there. But Germany, a big factor. Lizzy Burden.
Yeah, we're looking for green across the screen. I coordinated again. I didn't do it on purpose, I promise you. But look, outperformance set to come particularly from Germany, from these defence and infrastructure names, on this promise to do whatever it takes when it comes to Ukraine. But gains across the continent set to come in just a few minutes' time, Anna.
Yeah, absolutely. And so we'll keep an eye on what happens with German defence names, wider European defence names, the industrial story out of Germany very much in focus. Companies such as Heidelberg Materials, ThyssenKrupp, anything that supplies a German construction effort could be in focus today. And a European construction effort, to be fair, as well. Adidas could be a different story. We see Adidas, their numbers underwhelming. So how much will that be a different story? We see also that traders are no longer fully pricing 3 ECB rate cuts this year. So how much of an assumption towards growth do we make coming off this German fiscal impulse then?
Absolutely. All of that needs to be factored into a market that has been on a wild ride over the last few days. You've seen the hit the tariffs have caused over in the North Atlantic region. Are we about to see that here in Europe as well? So here we go. We're going to have to wait a while, I suspect, for the German market to open. But the FTSE 100 already in positive territory. The IBEX out of the gate very swiftly this morning, up 1.5%. Now, remember, yesterday was a really bad session for European equities. We are going to get a reaction to that, but there's so much other news flow that we need to fold into the narrative too. So there we go. The Stoxx 600 up by 0.1%. The European markets are climbing. The London market is up by 0.3%. But on the continent, the IBEX is already up very, very strongly. The CAC is up by 1.6% as well. Be interesting to see how European defence names trade broadly today in reaction to that German announcement. But I think it's going to take a little while to get the DAX going this morning. There's a lot of news flow to fold into that story, Lizzie.
Yeah, as we wait for Rheinmetall, let me take you through some of the other defence names that are already trading this morning, guys. So you've got Leonardo up 2.4%, BAE Systems 1.2%, Thales 3.5% up, Safran, Airbus, Saab, Indra, Sistemas, all strongly in the green this morning. And then if we look to some of those earnings names that we were discussing as well, well. Dassault Aviation up 2.9% already. Bavarian Nordic up 0.8%, Anna. So we're already powering ahead in this session.
Yeah, absolutely. So that's the defence side. The wider infrastructure side and the growth narrative clearly catching on, because basic resources is the best performing sector this morning. ArcelorMittal up by more than 6%. Some of the mining names up pretty strongly as well, up by more than 2.5% for the top 5. The banking sector also doing well this morning, up by 1.7%. Now, if we don't see so many rate cuts in Europe, then that plays positively for net interest margins, doesn't it? And so we see Spanish banks going higher, we see Italian banks going higher. So this isn't just a German story. There's something wider happening here in Europe.
No, and indeed you have the hopes of China stimulus powering the miners too. Iron ore has seen the reaction already, so that putting a bit of wind in the sails of basic resources, up nearly 2% there.
Is this just all the good news? I keep coming back to this tariff story and the turbulence that has been caused in North America. You look at what Canadian assets did yesterday, what Mexican assets did yesterday, what Wall Street did yesterday on the back of the tariff story. Europe feels like it's next, yet at the moment we're looking to the good but not the bad.
Yes.
Does one inevitably follow the other?
And going back to your question earlier, Lizzie, about whether what Europe does on the defence side can give them wins on tariffs, does it make the White House think along those lines? Or does it make the White House think, look what we managed to do on defence, let's see if we can do something with tariffs as well and get something for US business? So many questions, so many questions we can't even think of around tariffs right now because we don't know what the next 4 years are going to be.
The effect has been enormous.
It's only March.
It's only March.
2025.
Well, I can't remember how many days we are already into the Trump administration, but it's not that many. There is a long way to go in terms of this story. And the narrative yesterday seemed to be actually that Trump was still keen on this story of tariffs, that he felt that it was going to make America rich again, that was the longer-term picture. This is not a short-term phenomenon. The German market opens. It is up by 2.16%. Let me give you a GIP on my screen just to give you an idea of what the last 3 days, because I think you need to sort of take a step back and think about the totality of what we are seeing here. So on a 3-day basis, i.e. this week, Monday, Tuesday, Wednesday, we are up by 1.1%. The German market gap's higher this morning after a big move lower. Does the volatility continue? And is that a concern as well?
Yeah.
Like the price action at the moment is all over the place, and it's really difficult for the market to get a handle on what is happening here. And is that a negative in itself?
Right, and construction and materials, the best performing sector. So this is broader than just defence. So Hotif, Heidelberg Materials, all of those kind of names. Some of them listed in the UK as well. Kingspan, these are all construction-related businesses, and all of them going higher. That is the best performing sector this morning, along with industrial goods and services in second place. But gilt markets, are they catching something from Germany this morning?
Yeah, indeed, they're tracking. So if you look at the 10-year gilt yield, higher 9 basis points at 4.6%, the 2-year up 8 basis points at 4.26%. So not far behind the moves that you're seeing on bund yields this morning. We already had all the announcements on UK defence spending being increased by Keir Starmer ahead of his Washington visit, but clearly catching a vibe off what Merz has said yesterday.
But it's a different story. The UK debt to GDP number is significantly different to the German number, which is in the kind of mid-60s.
Well, that takes us to what Val was saying. You know, if Germany can handle this, that maybe is the conclusion from the bond markets. But can other parts of Europe, can Italy, can France, can the UK? I mean, these things have unforeseen consequences, don't they? And we wonder how this ripples around Europe.
I was listening to a German news podcast the other day which put it more bluntly. Britain's broke.
Okay.
You see this reaction.
OK, let's talk about what is happening in these markets in a little bit more detail. Estelle Menard, the CIO at LCL, joining us. Estelle, good to see you. Thanks for joining us and taking the time to be with us today. European bond markets, we are seeing yields going sharply higher. European equity markets are up today. What do you make of the European trade? What is the best way to position for this going forward? And does the move that we're seeing at the moment continue?
Well, we've seen a strong move since the beginning of the year on the European market because it has been really surprising for most of the investors that were invested on the US market to see this rebound. But if we look at what happened over the past 2 or 3 years, I mean, since 22, on $100 that went out of the European market, only $3 came back on the European market. So what does it mean for us? It means that the European market is still very interesting and we still have to look at this market that shows an under-evaluation compared to the US one. So we need to invest in this market, but yes.
Okay. How cautious do we need to be, though? We are seeing significant volatility. The price action is one day up, one day down. We still don't know what the European tariff story looks like for Europe when it comes to what Donald Trump is going to do. How much volatility should investors expect? Definitively,
these tariffs create uncertainties and strong volatility, and we will have a bumpy road over the next 2 or 3 months, or even 4 or 6 months. But so strong volatility. What does that mean for us as investors? We will find some interesting entry points on the market, on the European side, but on the US side as well.
So Estelle,
that's first my understanding of the market.
If you're going to move money into defence, and if you're going to move money within Europe, let's say into defence and infrastructure, does that mean that you take it out of luxury, for example? Because I'm looking at the luxury names up today.
Well, of course, if we look at what happened on the defence area and the defence sector, it will be sustained in the coming years. Not only in 2025, but in the coming years, because it will be a long trend to impact all this sector. But sure, we will need to invest. Europe is investing in the European sector. We will finance this investment by bond issuances, and we need to invest in this as investor in this area if we want to benefit from this strong demand that we will see in the next years. Do we have to sell the luxury sector to invest in defense? I'm not sure about that. We need to wait for what will happen in China, and we will see in the next hours if there is something a new plan that will impact China. So I'm not sure we need to make an arbitrage between the defense sector and the luxury sector. We just need to invest in some undervalued sectors with a strong potential. And if we look at the momentum and the EPS momentum, they are strong, even in the defense sector and in the luxury one. So we have to look at the EPS growth. And EPS growth is really an interesting point if we want to invest in the equity market. Bear in mind that we expect 12% EPS growth in the US for 25, 8% in Europe for 25, and I do not integrate the dividend and the share buybacks. So that will be very interesting for investors to look at the bumpy road and the uncertainties that will create volatility and create entry points on some very interesting sectors that have not been sustained or that have not been of interest over the past years.
Yeah, okay.
Although
so maybe
it can be in the US and in Europe.
Into Europe, yeah.
Excuse me?
Also looking ahead to this ECB meeting tomorrow, Estelle. Apologies for the delay. We've got traders no longer fully pricing in 3 ECB rate cuts this year. I just wonder whether, given this announcement on defence, you're maybe thinking about tomorrow's ECB cut being the last.
Yes, it could be the last, but I do not think it will be the last one, because if we look at the economic growth today in Europe, it's still a very low expectation are still very low, with 1% economic growth. And if we look at the defense investment we will see or will make in Europe, it will have an impact on the economic growth, not in 25, but in 2026 and beyond. So what does that mean today? ECB regarding the trend of the inflation, which is a downward trend in Europe, and the economic growth, I think ECB should have to cut its interest rate, and not only once, but certainly 2 or 3 times this year.
OK, Estelle, I'm thinking about what reaction Germany's spending plans might get in Paris. I'm sure there are many who will be pleased that Germany is going to be spending more, doing fiscal stimulus. But will the French government be pleased with a higher interest rate there? We see OAT yields up by 12 basis points. How does this make you think about OATs right now?
Well, regarding how it is in our portfolio, we were not very sensitive. You know, we had a very low duration because of this environment, which was not very, sustainable, not very interesting for us. So we were most on the short side of the bond market. But if we look at what will happen, and if we look at the defense proposition or defense spending, we can expect in Europe, sure, this will impact the sovereign bonds, European sovereign bonds. And if we look at what we can expect in terms of spending, if we make spending coming from 2% of the GDP to 3% of the GDP, what does that mean? Between 6 and 13 or 15% increase in the bond issuance in Europe. And I think that it's fair enough and it can be absorbed by the market.
So, great to catch up. Thanks for joining us, Stéphane, CIO at LCL. Thank you very much indeed. Quick look at the Core 6, what is happening across Europe. This is the big picture. These are some of the heavyweight stocks that we are watching. And as you can see, broadly, we are higher. The defensive names maybe are not actually where you see the bid this morning, so no surprise maybe to see Nestlé a little bit softer. But luxury is bid, to Lizzie's point. We're also seeing chip stocks higher, which is interesting given what is happening with the announcement that we got from the United States yesterday on the CHIPS Act there. But pharma's up, luxury is trading higher. Even the car sector may be catching a bid too. Schneider up by nearly 3%. But the defence stocks move is one we want to watch out for. Construction more broadly in Germany. Let's get the details with Joe.
So we are seeing some big moves, as you say, Guy, in the German stock, specifically in the construction sector. Take a look at some of these moves. We've seen Heidelberg Cement up around 10% at the moment, Bilfinger 16%, Hochtief gaining 10%, and Thiesenkrupp as well, up 8%. Now, all of this spending really feeding through into the market, quite stark in terms of the numbers coming out of those spending headlines on Germany, and actually still seeing a bit of a gain coming through into the defence shares as well, despite the massive gains we've already seen year to date. So Rheinmetall now up to well above €1,150. Also, the other firms, Hensoldt and Renk, getting a boost, but the construction, industrial stocks, really the big trade from Germany today. Then over to Samba, trainers, Adidas. This one is slipping. They are known to be conservative on the guidance, but the market's still not liking the update from the company today. The guidance looking a little bit soft, missing expectations once again for Adidas. So that one coming down, trimming some recent gains for that stock. Then over to tabletop elves and goblins, we've got Games Workshop up 8%. Now remember, this is now almost a £4 billion company in the UK, recently added to the FTSE 100 as well, and continuing its surge on the tabletop game sales for the firm and really extending that rally. Good numbers out of them once again. Then finally, on a morning call, Barclays, now that one up almost 7% as Exane goes to outperform, but also bear in mind we are seeing a move higher in the gilt yields this morning, potentially feeding through. Banks had a terrible day yesterday, one of the worst sectors on the day, and was down the most in around 7 months. So all of those stocks coming back up, and Barclays getting an extra boost as Exane goes to outperform on that one in the UK this morning.
Tabletop goblins was not something I thought we were going to be talking about this morning, but Joe, thank you very much. 8:14 and European equity markets responding strongly, positively, but of course in the context of that big sell-off yesterday. We're up by 1.2% on the back of the German news flow, up by 2.7% on the DAX. We'll go to Germany once again next. Coming up, Hensoldt shares surge along with other German defence and industrial companies. We'll talk to the CEO next. This is Bloomberg.
We are in an era of rearmament. And Europe is ready to massively boost its defense spending, both to respond to the short-term urgency to act and to support Ukraine, but also to address the long-term need to take on more responsibility for our own European security.
Former German Defence Minister, now President of the European Commission, Ursula von der Leyen, speaking this time yesterday. Since then, we've seen significant announcements coming out of Germany as well. We are going to see carve-outs, both at a European level and at a German level, from the fiscal rules. Oliver Dorrer joins us now. He is the CEO of the German defence company Hensoldt, and it is great to see you once again, Oliver. What did you make of the announcements?
Thanks for having me.
How quickly do you think... How quickly does this money get spent? Germany's talking about 500 billion. How quickly do you think that money comes?
Well, of course, we all know that what the main future coalition parties, the Socialists and the Conservatives, have agreed yesterday needs to go through the parliament. So we need a two-thirds majority. I think they have a rash plan on going through this next week. Then the next step will be the capability list. So very clearly, we see a paradigm shift in Germany. The past decades have been more or less ruled by the principle of design to budget. Now we're designing our armed forces, our defense, to capabilities. That's what we need to work out. And then I would say we can be very quickly on bringing this up.
How quickly? OK, so we're designing for capability now. Clearly, there is a need for significant amounts of kit for the armed forces if they are going to be a credible deterrent. In terms of how long that is going to take, there is a need now to do that, but it takes a while to get German defence companies spun up, to get the training done, to get the factories built. We talked about this last time. Is that process accelerating now, and how quickly is the rate of change developing?
Well, I would see a kind of spiral approach. I mean, looking at Hensoldt, as I told you last time, we have invested 1 billion recently. We took responsibility. So the commitment, whatever it takes, is very rewarding for us. And so with what we have done, building a new plant in Oberkochen, building a logistical center in Leiching, with all of that, I think we scaled a bit above the current demand in anticipation of a 3 to 3.5% spending. So we have like 50% additional capacity that we can bring immediately into this game. And in that regards, we will take, of course, the next step on investment as the orders turn in. Coming back again on this spiral, I think we have a couple of programs where we go into framework contracts. I think here very quickly, based on the budget availability now, we can order these additional, looking at the 20 Eurofighters. We have a program called Pegasus, where we produce 3, but we have options of additional 3, maybe 6 aircraft. So I think those orders can come in very quickly. And there's a new portion, as there will be a mix of I would say, classical, conventional, which is tanks, aircrafts, and ships. There will be also a portion of innovative things. I mean, going into space, not relying anymore on the US, innovation with regards to AI, building data networks. I think also here we're well prepared, and we have to work those capabilities out.
Oliver, is there? I'm just trying to get a sense of how much of this money, European and German money, will stay in Europe and how much of it might go elsewhere. In the short term, will there be a need to pay Americans for arms?
Well, I think, first of all, we see a very strong alignment between what Germany says, releasing the debt brake now for the defense budget, which I think is a very strong commitment, not putting a ceiling. Then we have EU with a rearm plan of Ursula von der Leyen, and I've been to Brussels on Monday. And what I hear is definitely there's a lot of buying Europe, and of course also the German plans are to reinforce the economy, buying in Germany. But on the short to midterm, very clearly, also operationally, we do depend on the US. So, I mean, also Germany has heavily invested under the first extraordinary budget into US technologies. But I think here we will have a strong call, and we are working with the US players, we will have a strong call of sustaining those capabilities through German and European partners.
OK. Will you be thinking about adding other product lines, Oliver? Because your focus is around electronics and things related to defence in that area. When Ursula von der Leyen was talking yesterday about ammunition, drones, vehicles, how does this change your business?
Well, I think I'm a big fan of strengthening strengths in that regard. I think also with our need now to deliver at scale, we will remain focused on sensors. Of course, we broaden the sensor landscape. Here we are open, also looking at M&As and a couple of topics. But I think the more important thing is going to smart and connected sensors. So being more software, more data-centric. That's what our strategy North Star is about. And I think that is where we will invest and where we will put our focus as we go forward. Because that's the innovative part of now spending budgets, as we will never cope with a spiral of a war economy, bringing platforms and so on. I think it's really about smart arming, and here I think Hensoldt will come into place, and that's not about entering additional branches.
Oliver, good morning. Lizzie here. I'm going to be optimistic here and ask you, however far away it may seem now, if we do get peace in Ukraine, if there is a truce, how do you expect that would affect European defence spending? Do you still think that this commitment to an era of rearmament would be there? And how would that affect your business?
No, I mean, everything what we see at the moment is very sustainable. I think the budgets that are under consideration is a plan for the next decade to rearm Europe, and I think in Germany it's the same. I mean, looking at the Hensoldt business, our exposure is in a single low-digit percentage to Ukraine. And again, a peace in Ukraine, cease of weapons in Ukraine, will not erase the Russian threat. So that means clearly Europe has to continue on that path. And it would be a great risk if we stop those investments just for the sake of the ceasefire in Ukraine.
Oliver, the stock came into the beginning of this year at 35. We're now trading at 66. We've got a volatility interruption this morning. The stock has absolutely soared. Are you going to sell stock? Should you sell stock at this point to fund the enhancements that you need to make to the business? Very briefly.
Well, no, I think it's also premature to really look. As said, I think this all has to go through Parliament first. I think we're well prepared. As I've said, we have invested, we took the... So there's no need for quick capex and so on. So in this regards, we do our math now based on the decisions of the German Parliament. And then as we also discussed with the analysts, we will revisit our plans, our ambition, our guidance, I think in the second half of the year.
We'll look forward to that. Oliver, we're going to cut it short. Thank you very much indeed for joining us. Oliver Dorr joining us, the CEO of Hensoldt.
The opening trade. We're 30 minutes into today's session and European equities are powering ahead this morning, powered by the DAX, higher 3% as you would expect, given this commitment from Germany to do whatever it takes when it comes to defence and Ukraine. Looking at some of those individual German defence names, and Rheinmetall up 2.7%, Hensoldt, we were just speaking to the CEO, up 6%, and Rent Group up 7.4% this morning. But I have to say, defence stocks are not the best performers this morning in terms of the sectoral basket. Construction and manufacturing actually doing even better. That's up 4% this morning. Perhaps some of these defence moves already priced in. But Germany's Chancellor in waiting, as I say, Friedrich Merz, explaining the need behind this move. Let's take a listen to that.
Deshalb wollen wir ein kreditfinanziertes...
I want to be very clear here. Whatever it takes must also go for our defense now, in view of the threats to our freedom and to peace on our continent.
For the details, let's bring in Bloomberg Opinion's Chris Bryant out of Berlin. Chris, good to have you with us. When I saw this headline about 500 billion euros, it was a real shocking moment. I felt like we were in a new era. Just tell us how significant this really is.
Well, good morning. And yes, it does feel like a new era. If there were a couple of criticisms of Germany in the past, it was this: the economy is stagnating, the infrastructure was falling apart, and it didn't spend enough on its military. And now it's come out and said, you know, we're going to spend 500 billion to upgrade our infrastructure. And defense spending, essentially, there are no limits now. Anything above 1% of GDP will not be included in the debt brake, which means Germany is free to increase spending without coming at any cost to other types of spending, which gives it a lot more freedom. It's got plenty to do. It's only spending 2% of GDP at the moment, probably need to spend close to 3% in future, but it now has the fiscal wherewithal to do so.
Chris, how quickly does this happen? How quickly do the cogs start turning?
That's a very good question, and the answer is not as fast as we'd like, I think. Partly that's due to a lack of capacity, as we've heard before. Fortunately, though, this country is blessed with a huge manufacturing base, much of it, of course, geared towards the automotive industry. But, of course, the automotive industry now has a lot of spare capacity, potentially employees that can move into the defense sector. So I think now that this commitment is there, and it's very important that it comes in form of a debt brake and not another emergency fund, which wouldn't have given the defence companies the kind of long-term security they need to make those investments. Once this goes through Parliament, I think they'll have the confidence to invest, and you'll see an increase in capacity follow.
OK, Chris, we'll leave it there. Thank you very much indeed. Chris Bryant from Bloomberg Opinion, talking about the significance of what we had coming out of Germany yesterday. We're certainly seeing some significance for the bond market this morning.
Yeah, certainly resonating through the bond markets this morning. Bunds for sure up by 17.9 basis points, 18, let's call it, on the German 10-year. But it's not stopping at Germany. We see those yields going higher across Europe, not to the same degree as Germany, but certainly everything in Europe seeing higher yields. And across the German curve, we see those higher yields. Let's get into this conversation then with Bloomberg's Valerie Teitel back on set with us. Valerie, give us your latest thoughts on the scale of this Bund move this morning, because it is across the curve and it is substantial.
Yeah, it is substantial. I mean, just look at the rest of the European bond market also suffering the same kind of declines. You know, France up 12 basis points, Italy up 11 basis points when it comes to their 10-year yields. But I think the thing that's surprising to me at the moment, given the market reaction, is just how positive the read-through is for European growth, is what the market is assuming right now. In some way, you can argue, or you can really pose a question to that conclusion, Anna, because Europe is just replacing free defense they used to get with the U.S. with one that they have to pay for. Is that really going to net create growth in the European Union? It seems like the market reaction, though, is very, very positive. I mean, I'm looking at the euro. We're flirting with 107. We just sustained a break about 105 just yesterday. There seems to be no doubt in the market's mind that this is going to some way turn around economic
But this is
growth.
the playbook from the United States. The United States, over the last few years, has run huge fiscal deficits, has basically powered its economy forward. Why can't Europe now have some of that as well? Why doesn't this translate into growth? Yeah, we are spending the money that we weren't spending before, and we're maybe having to spend money on defence that we didn't have to before. But Germany needs to, rearm. That there's some trickle effect there, but the infrastructure story is also quite significant as well. This is the US playbook, isn't it?
Well, in some way, the U.S., has the ability to do that because they are the reserve currency. Other nations need to start thinking about their fiscal headroom. Yes, Germany
doesn't have that problem.
Has ample room, but other nations, look at what the turmoil that France went through with their latest budget proposal. This might have to come alongside, at least for other countries, cuts to other areas.
But if Germany becomes an engine of growth again in Europe, again, the ripple effect into the rest of the continent is quite significant. You're not going to be just ordering from German companies. You're going to be ordering from French companies and Italian companies. There's plenty of ripple effect that could come out of Germany's fiscal story becoming easier and more growth orientated.
Yeah, so possibly driving more private investment into industrials on the back of it. But I would worry one thing, though, is that Trump in his speech overnight was really clamoring about these tax cuts. He needs to fund them in some way. And if he is cutting deals with Mexico and Canada, perhaps he is really looking to raise this tariff revenue against the European Union. So that could be one thing to the downside that we need to keep our eye on. If he does need to fund those tax cuts with tariffs and he is cutting deals with other nations, perhaps the European Union is where he's setting his sights on raising that revenue.
Exactly. So where are you seeing euro dollar higher? 106 right now. How much is that also because of the dollar drop on tariffs? How much is it because of the dollar drop on Ukraine?
Look, I think a lot of the move in the euro is more about the growth differentials. Euro was very depressed, and many people were very depressed on the outlook for euro. Remember, we were calling for parity just a month ago due to the growth differentials between Europe and the U.S. That has like totally done a 180. Now we're worried about the U.S. consumer, and we're not worried about the growth impact or about any negative growth impact in Europe. We're looking at revisions to the upside when it comes to European growth. So I think it's very much growth dynamics leading the currency moves, especially when it comes to the euro-dollar pair. But the ECB, could add a bit more to this. Will Lagarde sound positive tomorrow in this press conference, or will she in some way, urge caution in talking about the future of European growth because of these tariffs overhanging the European economy?
Lizzie's going to be there.
I know, cut now and then what? That's going to be the question for Christine Lagarde. And how do you factor in the defence story? Interesting to see Goldman, MUFG and TD abandoning the euro-dollar parity predictions already before we had this news on German defence. Bloomberg's Valerie Teitel, we thank you for that analysis. But that really setting us up for the ECB tomorrow.
It does set us up. You're going to be there, which is going to be really interesting. And the fiscal story versus the monetary story, I think, is absolutely fascinating. It's a story that the Fed is having to deal with as well. Valerie alluding to what is happening with the growth story, but the tariff story also inflationary. Let's talk about another aspect that has powered the US forward over the last few years, which could be changing. Donald Trump has called for an end to the $52 billion semiconductor subsidy program known as the CHIPS Act. Here's what he had to say in the address to Congress last night.
Your CHIPS Act is a horrible, horrible thing. We give hundreds of billions of dollars, and it doesn't mean a thing. They take our money and they don't spend it. All that meant to them, we're giving them no money. All that was important to them was they didn't want to pay the tariffs, so they came and they're building, and many other companies are coming. We don't have to give them money.
The idea is that actually tariffs will encourage companies to come to the United States regardless. That's certainly an interesting aside to what has been talked about over the last few years in terms of the need for subsidies. Certainly Taiwan has driven that story. Bloomberg Intelligence senior analyst in this sector, Robert Lee, joins us now. Robert, what do you make of the comments? What happens now?
OK, well, I guess it really ties in with what you were discussing about debt reduction a few moments ago with Elon Musk's efforts within Doge to try and reduce the level of government debt and maybe push the responsibility for funding some of these things onto third parties. So maybe there's a parallel in the same way that Trump is looking for European countries to carry more of the defence spending load, to protect the continent of Europe. Similarly, if TSMC and others are investing in the States, they should do that from their own balance sheets and not using US taxpayer money. So I think that's where he's coming from. But, what's it going to mean to the likes of TSMC?
Yeah, Rob, a lot of semiconductor factories are promised in Republican states. Surely this is going to be a hard sell in Congress. And I'm wondering what it means for those companies that have already been promised this subsidy support.
Yes, well, I guess the train is already in motion on the subsidy because TSMC's Arizona fab, going back to the Q4 earnings only a few weeks ago, they confirmed that that's in production at the moment, and actually the production yields are not too bad. So it's, an impossibility to reverse course on that. And as you would have seen earlier this week, TSMC confirmed plans to invest somewhere close to $100 billion in building out, I think, up to 6 fabs in the US, if you include the current one. So I would very much doubt that TSMC, etc., reverses course on this. And, going back to Trump's speech we saw a few minutes ago, he's sort of linking that with potential tariffs. So I guess there's been a reversal in US policy. Previously, there was very much using the carrot and incentives to attract investment into the US. Perhaps now they're using more of the stick. But from a company point of view, fabricating chips in places like the US, a developed country, a developed economy, does come with a cost penalty. So there's a question mark as to the long-term profit outlook within the US fabs of these overseas, mainly Asian companies investing in the States.
OK, so from that, then, do we conclude, Robert, that if they're using the stick is not going to prove as attractive as the carrot was, and therefore we don't see quite so much chip fabrication on US soil?
Well, that's a really tough one. I guess the direction of travel, I would say, still is pretty clear. The US is still the world's largest economy. Again, why is TSMC and others putting plants in the US? Not just because they had the incentive or the US is in some way coercing them to some degree. But, you've got some of the world's largest end customers, Apple in particular. So TSMC's new fab in Arizona will be servicing Apple. There is genuine business and genuine business reasons to be operating in the US. But long term, does that mean the profit margin at these US fabs is going to be lower than what they achieve in Asia? Then I think that's probably the case.
Yeah, planning for the long term certainly seems like a challenge right now. Bloomberg Intelligence senior analyst Robert Lee, thank you so much for joining us to talk about that chips story. 8:42 here in London. Coming up on the programme, we'll get back to the tariff story as it continues to develop out of Washington. US futures are higher on that theme. We'll get back to that shortly. We'll speak to the former Mexican Undersecretary of Finance and Public Credit. Washington's trade policy is a major topic of discussion at the ongoing Bloomberg Invest Summit in New York. We'll leave you with some of the highlights from our key guests.
I do factor in some effects of tariffs now on inflation, on prices.
We've not seen this level of tariff, at least in modern times.
I think these are going to adversely affect us with respect to inflation. They'll adversely affect us with respect to growth, adversely affect productivity.
The opinions on tariffs vary from they're incredibly inflationary to they are potentially contributing to a recession.
Gotta take that longer term approach. Hope or maybe expect at some point that they'll get to outcomes, markets will calm.
I think what you can't control is consumer confidence and corporate confidence. And I think that is what is falling off a cliff right now.
If you don't make your product in America, however, under the Trump administration, you will pay a tariff, and in some cases, a rather large one. Countless other nations charge us tremendously higher tariffs than we charge them. April 2nd, reciprocal tariffs kick in. The tariffs will go on agricultural product coming into America, and our farmers, starting on April 2nd, it may be a little bit of an adjustment period. I have also imposed a 25% tariff on foreign aluminum, copper, lumber, and steel. Tariffs are about making America rich again and making America great again, and it's happening, and it will happen rather quickly. There'll be a little disturbance, but we're okay with that.
There'll be a little disturbance. President Trump there addressing the joint houses of Congress. Now, the Mexican president, Claudia Sheinbaum, is taking a diplomatic approach to negotiations with the United States to lift its 25% tariff. America's top trade partner may seek other markets for its exports if the tariffs continue.
But it is inconceivable that no thought is being given to the damage it will cause both U.S. citizens and U.S. companies as a result of the price increase of goods produced in our country, as well as the damage it will cause by putting a stop to job creation in both countries. Nobody wins in this decision. On the contrary, it affects the people we represent.
Joining us now is LSE Professor Vanessa Rubio Marquez, former Mexican Undersecretary of Finance and Public Credit. Really good to have you with us, Professor. Thanks for joining us. So we expect to hear from Mexico, I think, on Sunday about its retaliation. What are you expecting the substance of that to be, and why do you think Mexico is leaving it so long?
There's two moments in the future that I think we should consider. One that was also referred to by the president of Mexico yesterday in relation to the possibility of having a conversation with President Trump around Thursday. So this, I think it's a landmark that they expect that can change circumstances somehow, and that can hopefully reach to agreements. And then if that doesn't, result in a different outcome, then she was going to announce measures on Sunday. And she said that this could be tariff and non-tariff. So basically, I think what they're considering is to put also tariffs on specific products and on specific states in the United States.
OK, we heard from the US Commerce Secretary Howard Lutnick yesterday, and he was talking about the possibility of softening tariffs on Canada and Mexico as soon as today. If that indeed comes to pass, would that be a surprise?
Well, basically, none of this is a surprise anymore. Now, I think that we need to price in the lack of predictability and the lack of certainty that this new era we're in implies, and we need to navigate with this unpredictability and uncertainty. I think what Mexico wills to do is to strike a negotiation with the U.S. as we have done many occasions in the past, as it was done during presidency, the first presidency of President Trump, in which basically the constant threat was about the cancellation of back then NAFTA, also the anchor of the predictability of investment and trade in Mexico. Mexican exports to the U.S. represent 30% of our GDP. And as you were saying, we're the first trading partner of the United States, the first source of their imports, and also one of the main trading partners of the majority of the 50 states in the United States.
So we've talked about what the retaliation could be, but Vanessa, good morning. What about what Mexico could offer in terms of the border crossings? Because I'm looking at them and they're below 2019 levels. What more could Mexico be doing and offering to get this reprieve that Howard Lutnick is hinting at?
That's a key point, because if we see what is happening now, we're not negotiating trade with the United States. We're negotiating security in the form of the fight against cartels and against fentanyl, and in the other hand, migration. So basically, trade is being used as a tool for negotiation and as a threat in case not enough is being done on security and not enough is being done on migration. The question here on the table of negotiation is what is enough? And you need metrics for that, and you need to have numbers for that. In the first delay of 30 days of the imposition of these tariffs just a month ago, it was 10,000 troops of Mexican military in the border. What could be enough in terms of these tariffs being put to a halt for the next occasion? We don't know, and it's precisely what I think they're negotiating.
And if you were at that negotiating table, would you take comfort from the idea that there is a backstop on how far Donald Trump will go when it comes to tariffs, when it comes to inflation maybe, or growth, or the 10-year yield? What do you think that backstop is, if you see one?
I was in that table in Trump #1, being Deputy Minister of Finance of Mexico. And I can tell you that at the time we were negotiating a new version of NAFTA back then, we didn't know the name was going to be USMCA. We were still being threat about the canceling of NAFTA altogether. So it's a very tough time to be negotiating in that table. But you have to make agreements. You have to trust some of the elements of that negotiation. But again, I think there's something that here changed for good, which is the lack of predictability and the lack of certainty in doing business when we had 30 years of enjoying a framework and a predictable framework for doing business in North America. So damage is going to be done to growth, to inflation, to jobs, and to prosperity in the region.
Professor, good morning. It's Guy. Is Europe next?
Anyone can be next. In this war trade, I think anyone can be the target. We thought that being a partner of the United States, we thought that being the neighbor of the United States and being a trustworthy ally of the United States would mean that we would have this predictable framework for many years to come, no? But it's not the case. And what this implies is that all the agreements and all the legal frameworks are quite vulnerable to politics, to rhetoric, and I think anyone can go in this trade war. In the case of the EU, for instance, exports to the United States represent 3% of the GDP. In the case of Mexico, just as a matter of comparison, is 30%. So there's different levels of damage, but I think everybody will suffer, and of course jobs, and of course growth, and of course productivity will suffer, and companies and businesses need to price in this new ecosystem of volatility, of uncertainty, and this is not good for businesses, of course.
Do you think that we could end up in a spiral of tariffs? There was a suggestion yesterday that the United States may respond to Canada imposing reciprocal tariffs, that there may be reciprocity to the reciprocity. Is that, do you think, a road that we will go down, that ultimately we will end up in a spiral of tariffs, that this will get worse and worse? Or is it reasonably static once imposed? How should companies be thinking about this? How dynamic is the process going to be?
No, I think basically, since we're here on chartered waters, sky is the limit. If one imposes retaliatory measures and the other imposes reciprocal tariffs and then retaliatory measures and then reciprocal tariffs, I mean, anything goes. But I think the fact that there's space for negotiation, space to halt this, is very important. To maintain dialogue is very important, to maintain a table of negotiation, because you cannot go with this ad infinitum. You would, basically target growth, target prosperity, target poverty, target jobs. And this is not the end game. In the case of Mexico, basically, it has been clear that the end game is actions on security and actions on migration. Well, let's discuss migration, let's discuss security, and then, of course, discuss trade to have a predictable framework once again.
Predictable, that's a key word right now. LSE professor in practice, Vanessa Rubio Marquez, thank you very much indeed. Coming up later today, maybe we'll get some news. US Commerce Secretary Howard Lutnick will be live on Bloomberg Surveillance. That conversation, 1 p.m. GMT, 8 a.m. Eastern Time. Let's talk about the markets very quickly.
Yeah, US futures are watching that Lutnick conversation, watched it yesterday. I'll just draw our attention, there's so much to handle this morning, to a headline across the Bloomberg terminal saying that the EU is delaying its roadmap to phase out Russian gas. Now, Europe relies a lot less on Russian gas than it did, but there's still some reliance. This feels like more shifting of the tectonic geopolitical plates as Russia comes in from the cold, certainly from a US perspective. What does this mean for Europe?
Europe desperately needs cheaper energy. That's certainly a story, making it more competitive, but at what cost? And maybe actually you've got to think about the defence spending that is being now proposed as well, and think about that in that context too.
Which indeed is powering the euro higher. As Valerie said, we're flirting with a 107 handle at this point, stronger 0.7% as traders consider how much economic growth could come off this defence spending. That does it for the opening trade. The Pulse is up next. This is Bloomberg.